So, let's go to the daily time frame, man.
Do it.
Let's go to the daily time frame, and we're gonna go to the daily time frame. Each candle represents a day. I'm gonna talk about. Well, let's talk about first. We got that resistance all the way up here near them all-time highs. That's 755, right? That's where we've been down here since what's that? Friday, right? And so we rejected off that resistance last week, ended up closing here on Friday, and that support level is that 740 area, right? 740, 741. So saying that to say, man, we want to talk about what happened on each day, right? So Thursday, you see we rejected off 755. We couldn't get above that level, right? That's why these levels matter, right? Mm-hmm. These are magnets. Friday, right here, you see that we couldn't get below this level, right? That 741, 740 level. This is a prime area too, because market has these long wicks, and as soon as it gets here, it gets bought back up, right? You see right here, you got the sellers pushed it back down, and then it gets right back up by the buyers. We got the sellers pushed it down, but then buyers pushed it up even further back up here, because I told you guys, or if you don't know, when a candle is green, that means it closed higher than when it opened. So it opened here at that low. We went as low as here, but then buyers bought it up so much that it went past where it opened at and closed up here. So that was signal to me, hey, this is strength. Buyers are coming in like crazy, which is why we see the next 2 days we end up going up to the upside. All right. Back to this level right here. So on Monday, we had oil prices advance as the U.S. and Iran exchanged strikes for a 9th consecutive day, right? So for a 9th consecutive day, they exchanged strikes. We got the CNBC link right there, and Apple had a 2% drop weighed on the Dow Jones. But first, tell me how you feel about these consecutive strikes, man. We've been talking about it every week. It's like, what can we even say? Do you have anything new to say?
I think that it's gonna come to a point where it's just so much news impact that like it's affecting the markets every time, right? 9 times in a row. We done seen some type of impact on the market, whether that be the words, whether it be the actions of, you know what I'm saying? I just be prepared for the headlines, man.
Be prepared.
It's right there.
We've just been ranging. This is since we hop back into this range. It's been since Tuesday, June 30th. Last Wednesday when we were on our live, we were all the way up here. We ended up testing. So it just shows you how fast things change, man. Last Wednesday we up at the high, and now this Wednesday we in the middle of the range at 748, going up towards the high, with the low of 740 is where we started this week, right? So the oil and oil prices rising up, and the war ended up causing the market to go down. So you see what we had on Friday, and then you see we gap up Monday. I forgot what caused us to even gap up overnight, and we opened the Monday at 747, but then went right back down to 742. So if you guys don't notice anything, you can obviously see every time market hits a low, we get bought back up, which is why we emphasize buying opportunities, man, right? We're taking advantage of opportunities. Last week, we had the on Tuesday as well. We can move on because I was just about to talk about the memory chips and the semiconductors. These are the hottest right now. We was that both Wednesday ago when you did the breakdown for us on the
computers
the computers. So that was both Wednesdays ago. We the clips is in there somewhere on YouTube, but Flash gave us a breakdown exactly what these memory and semiconductor companies do and why they're so important for AI. So on Tuesday, chip makers. So on Monday, you see that's the S&P 500 going straight down. But Tuesday, we ended up rebounding. So on Monday, all those top chip companies that we talked about in the semiconductor companies, they fell, right? They got impacted. So chip makers led a rebound. As soon as they fell, we see, they led a rebound past Iran headlines toward earnings. Okay, look past it, right? So like I asked Flash, I try to ask him, hey, how he feels about the Iran war. There's not much you can say because at this point, we just look past it. So they ended up dropping. They snapped, all 3 indexes snapped a 3-day losing streak. Micron and SanDisk, which are top memory companies, each served over 12% with Applied Materials, and Marvell, which are more memory companies, over 8% strong on Taiwan and South Korea export data. So as soon as it dropped, we rose right back up. That is the DRAM ETF, which we've been taking advantage of the Discord in our community. So it dropped to a low of 48. Wow.
That's crazy.
Wow, man, 48, right?
I was in the last couple of days too.
Right, that was Friday. I knew we dropped, but I didn't know we dropped that much, man. $48, and then right back up to $57. So we dropped on Friday, and if you didn't pick it up, you got to pick it up, right?
I was gonna say
18% already, right? So I didn't get it at 48 last Thursday, Friday, but I got it at 52, right, to add some more, right? That's why dollar cost averaging is so important. This is only $50, man. This is $50, and I believe that this is a $100 stock. And if you go from that 48, if you got in that low, back to the $100, that's 105%. We was talking and that's how much the percentages matter, man. From where we are now, right? So if you cop now instead of that 48%, you miss out on an extra 25% because now from 57 to 100, it's 80%.
Yep.
That's an extra 20%. So that was DRAM, the memory company. You got anything you want to say about this?
Broke it down perfect.
Boom. We're going to move on to SMH, the semiconductors, right? And once again, Flash broke it down a couple weeks ago, man. So the semiconductors, you got the memory, that's the ETF we just looked at. Now we're looking at the semiconductor ETF, right? This is SMH, right? So
memory
SMH.
is RAM too, by the way. Yep.
Bet. Boom. You know what it stands for off the top of your head?
No. It's random something memory. It might be. I don't know if it's access. I think it's random something memory though.
I think access might be it. We can look it up. I think I remember seeing the access, man. So on Friday for SMH, right, the semiconductor ETF, we ended up dropping from right here Thursday 576 to a low of 535, right? I have a load the boat zone. That's crazy. I have a load the boat zone, meaning, hey, if it gets to this 527 level, which it did, this will be a great level to pick up.
Load the boat.
Hey,
that's us.
No.
Okay.
Shout out to I actually got it from Ian Dunlap from Earn Your Leisure. I think he calls his zones a load. He has a load the boat zone, which is throw that money up in there.
No, we gotta create our own.
We're gonna create our own. You know what I'm saying? So 527 is that zone where you want to just, hey, if it gets here, you want to accumulate as much as you can. And I like 527 because if you pay attention to the chart, you can see this is the exact level that we started the run up from that 527 to 671, right? So hey, if you want to get into the memory companies, whether you get you fractional shares or you got 500 you want to put to the side, right? You're looking at, from 537 or 527. If it gets back down that further, you're looking at a 24% gain, right? Memory companies. So the thing about semiconductors, they already ran, but for you to be able to get the best bang for the buck and get the best results, you got to learn how to read the chart and look at different, and learn how to read the economy and see where things are going and read companies to be like, hey, memory is next. Hey, cybersecurity is next, right? So then we can be able to take advantage of those, and you can do it with the ETF. These are all the top companies in one that are in that sector. But since March 2026, this sector ran from 373 all the way up to 671, 80%, man. So, hey, opportunity all around the market, man. So when you see a pullback on these zones, if we get to 435 at some point, like we talked about last week, midterm elections aren't the best times, right? If we go, because we're still in these all-time high areas. If we get back down here to these areas, that's 80%. But hey, we might not fall 80%, but what if it's 40, right? What if it's 30? You know what I'm saying? Which we already did. So shit.
Yeah.
520. So hey, look, this is why you got to emphasize buying the dips, man. When you see a dip and it's a red day, take advantage of the red days. And then, you got anything you want to say about semiconductors?
He's on the money, twin.
All right, bet. Just